Ma'am, you can start.
Brahma.
Ma'am, you can start, ma'am.
Gopinath should start.
Okay.
Prayer over.
The management, secretary, principal, IQSC, and the faculty, Department of Corporate Secretaryship of Dwarkadas Govindas College extend a warm welcome to this gathering to the collective knowledge of sharing initiative jointly organized with the Southern Indian Regional Council, the Institute of Chartered Accountants of India. The college motto is Satyam Param Dhimahi, and the motto of institute Yaheshu Sudhe Jagdli. It is the two institutions come together. The motto to align in their academic excellence is contributing to the nation's building. So with this positive quote of the proceedings with the college prayer and institute anthem. Thank you, DP sir. We start with the prayer, college prayer.
Puratam Satyaparam Trisatyam Satyasya Yonim Nihitam Cha Satye Satyasya Satyam Vrita Satya Netram Satyatmakam Tvam Sharanam Prapannaha Vani Gunanukathane Shravano Kathayam Hastau Cha Karmasu Manastava Padayornaha Smrityam Sirastava Nivasa Jagat Praname Drishtisatam Darshanestu Bhavattanunam Namo Bhagavate Tasmai Krishnayadbhuta Karmane Rupanama Vibhedena Jagat Kridati Yoyataha Om Shanti Shanti Shanti.
Yaesha Supteshu Jagrati Yaesha Supteshu Jagrati Kamam 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 Pursho Nirvimanaha Tadeva Shukram Tada Brahma Tadeva Amrita Mucchate Tasmin Lokaha Shataha सर्वे तनूनात्यपि कश्चनात्यपि कश्चन एतद्वैता 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 एतद्वैता
Thank you, DP sir. I request our head of the department, Dr. Prabha Rajagopalan ma'am, to deliver the welcome address.
Namaste. Commit yourself to lifelong learning. The most valuable asset you will ever have is your mind and what you put into it. These are the words of Albert Einstein. Lifelong learning is possible for a curious learner only. Each passing day has something new for us. With this strong ideology as our strength, we begin our second day of professional development and capability enhancement program on accounting standards as a part of the Professional Advancement Initiative of the Department of Corporate Secretaryship. The management, secretary, principal, IQAC, and faculty of the Department of Corporate Secretaryship and the Southern India Regional Council, the Institute of Chartered Accountants of India, extend a warm welcome to all our esteemed guests, enthusiastic participants, and vibrant faculty. We believe that this initiative to update ourselves with recent changes and latest trends in industry, policies, and laws will go a long way in opening our minds to relearning the concepts from a new perspective. We are sure that the key stakeholders will be largely benefited by the knowledge shared by the expert resource persons. We welcome you to another session of lifelong learning. Namaste.
Thank you, ma'am. I request our principal, DG Vaishnav College, to give the presidential address.
Yes.
Prabha, I'm not able to hear. He was saying that the principal has to speak. No?
Principal is not available, ma'am. He's not able to join us. I'll continue. Thank you. I'll continue.
Okay, okay.
It is a great honor and privilege to have Dr. T.S. Prema, Head PG Research Department of Economics, day and evening. She has showcased her exemplary leadership, which is evident in the key roles as she has shouldered in her career. Coordinator of IQAC, NSS Program Officer for 11 years since 2008, Member Secretary, Academic Council, Convener of National Accreditation and Assessment Committee. She has specialized in health economics and has completed PCA with distinction. Dr. T.S. Prema has successfully guided 5 MA, 5 MBA students and 35 MPhil projects and produced 3 PhD research scholars. She is currently mentoring another 6 scholars. Research is her forte. She has presented research papers in 23 seminars and 44 conferences at national and international levels. Her proficiency was well recognized by the government of Tamil Nadu. She is she was invited to write economics lessons in Tamil for +2 students, which was published by the Tamil Nadu Textbook Society. Dr. T.S. Prema has been a successful debater, orator, poet, essay writer, and the best comperer since 1980. She is a live running commentator for Temple Kumbhabhishekams. Dr. T.S. Prema so far has visited more than 7 countries for her academic conferences and literary programs. She has been the recipient of more than 15 state, national, and international awards. We are happy to have you, ma'am, to have graced this prestigious occasion. Thank you. Welcome, ma'am.
A very good afternoon to one and all present here. At the outset, I would like to express my sincere thanks to our beloved Secretary, Sri Ashok Kumar Mundraji, our revered Principal, Dr. Santosh Babu, for having given us this wonderful golden opportunity for conducting programs of this kind. I express my happiness as well as my thanks to Dr. Prabha Rajagopalan, Head of the Department of Corporate Secretaryship, and her team members for having given me this opportunity. In the capacity as IQAC coordinator and NAC coordinator or convener, whatever you say, I would like to extend a very hearty and a warm welcome to the key speakers of today's program. I am very happy to note that the Department of Corporate Secretaryship has jointly organized this program along with SARC, ICAI, and IQAC of DG Vaishnav College, Dwarka Das, Govardhan Das, Vaishnav College, because no more we can say this as DG Vaishnav as per NAC rulings. So now it's my privilege to have all the experts here, and I would like to say NAC is nothing but it is to accredit the institution's quality, and
I think there's some technical glitch in the broadcasting of Prema ma'am. Can we go ahead, Mr. Gopinath?
Sorry, ma'am. Ma'am is joining with us shortly, ma'am.
Okay.
shall I continue, Prabha?
Yes, ma'am.
Okay.
Ma'am, please continue, ma'am.
Okay. The Institute of Chartered Accountants of India is the apex body. Actually, the accounting standards have been formalized with the help of this ICAI. And recently, my friends, I would like to tell you and share this happy news with you. I was asked to write about the first woman chartered accountant of India, Ms. R. Sivabogam. I had the rarest opportunity, though I have no connection with the commerce field. See, in all the other subjects I am in touch with right from my childhood. Commerce is the only subject, but accountancy also I had done at my UG program, but not commerce as a subject. But I was given this rarest opportunity by my guru, mentor, Dr. Yasoda Shanmugha Sundaram, who was the former Vice Chancellor of Kodaikanal Mother Teresa University, and we have been writing all the women achievers of various walks of life. I was asked to write about Miss Sivabogam. I was astonished to see that a woman of those days, not now, of those days was able to elevate herself and enhance her capabilities and reached the top of her accounting standards, and she became this SARC and ICAI. She was the first woman to attain that position, and no doubt today's speaker, our guest speaker, Ms. Revati also would raise to that level. And to tell you very frankly, Dr. Giridharan was in our college and he started his career from our college. It's really a pleasure for us to have him here with us this afternoon. Really, it's amazing to note that there are many glimpses in the past history that accounting and auditing have had their beginning right from the Vedic period. If you take your Rig Veda, there are 4 Vedas, all of you know that. I have not come here to take classes for you. In Rig Veda, there are examples for these accounting terms, terminology, everything. And Chandilya's Arthashastra also says the rules and regulations of accounting, auditing, the principles governed, and also we can even say, or we can even see, there are examples in Arthashastra wherein many things have been discussed in detail regarding the roles and responsibilities of accountants, auditors, and the risk management, uncertainty management, the fraud practices management, everything has been given. So all these things are not new to us, but it is the ICAI, Institute of Chartered Accountants of India, has streamlined the auditing, what should I say, the auditing standards. So today we have this accounting standards have been streamlined by ICAI, and that has been the topic of the corporate secretaryship's 5-day program, the accounting standards, in which they have given it as the professional development and capability enhancement. Definitely, I think this will be an eye opener for many faculty who are in this field and many who are going to be future chartered accountants. So, I, on behalf of the college, on behalf of IQAC, and on behalf of NAC, I wish to congratulate the team of Dr. Prabha Rajagopalan, who have taken these special efforts to conduct these 5-day program for the benefit of the professionals, and also they have been concentrating on the enhancement of capabilities. So I think this would go a long way in the lives, in the professional lives of every chartered accountant and every teacher of commerce. With these few words, I once again express my sincere thanks to Dr. Prabha and her team, as well as to our beloved secretary and revered principal for rendering their services in the development of curriculum and in skill development of the college. With these few words, I retire to my seat. Thank you so much.
Thank you, ma'am. We request CA Revati Raghunathan to take over.
Yeah, okay, you can see me, I hope. Yeah. So good evening to everyone. Thank you very much to the secretary and the principal of Dwarkadas Govardhan Das Vaishnav College. I just heard we shouldn't call the college as DG Vaishnav College, and Dr. Prabha Rajagopalan and also Dr. T.S. Prema, women at the helm of affairs at the economics and the corporate secretaryship department. Ma'am, a great salute to both of you. You are leading the I would say kneading the minds of the young people who are coming into your institutions, and also leading them on to break all the glass ceilings through programs such as this professional development and capability enhancement which you are conducting. And also a very special good evening to Dr. P.T. Giridharan, who, even though he may have started his journey in your college, I think has completed his professional journey through SARC of ICAI, and I have been fortunate enough to interact with him on many occasions. It is a great pleasure for me to come here today and address this 5-day program on the second day on the knowledge enhancement and professional development, where you are upskilling yourselves on the Indian accounting standards. And as a representative of SARC of ICAI, it gives me great pleasure to be a partner to this program where this knowledge dissemination is going to happen. Even though, you are having highly technically skilled speakers who are going to speak to you about the various accounting standards, I just thought I would give you my take on the importance of the accounting standards. I was actually thinking, how can I give an analogy for this? See, the analogy which I could think of was, when we go to a school, all of us need to wear a uniform, right? We need to wear a uniform to identify ourselves with the institution that we are coming from. So similarly, if you see every entity, every business entity, every commercial organization needs to have a financial statement. And this financial statement is what is relied upon by all the stakeholders in the ecosystem, maybe the government, maybe the financial institutions, maybe the vendors, the debtors, the creditors, every person, your employees, your regulators, all of them rely on the financial statements. And for the financial statements to make sense, what we should understand is these financial statements are going to be utilized by various people who may or may not have the technical skills, the professional skills to decode the financial statements if it is presented in different ways. So to bring a uniformity and to bring in a regulation so that the financial statements are uniform and can be utilized properly by the stakeholders, these accounting standards have been framed. These accounting standards, go a long way in helping, especially in this economic scenario of globalization, which has happened, where cross-border transactions are the norm of the day right now. And, for a person to understand the balance sheet or the financial statement of a US company or a UK company or an Indian company and, make sense of the transactions, you need to standardize everything. And these accounting standards, as the name suggests, goes a long way in standardizing these financial statements so that the understanding, the basic premises of these financial statements are understood in the same manner by all the different users of the financial statements. So you can say that they are the basic policy documents. And what do? They ensure the consistency, transparency, and the comparability between the financial statements. If I take the financial statement of, say, an MNC here, like a Hindustan Lever, it should be compared, globally also. You take Unilever, so it's only the scale is going to be different, but the comparability, if you compare, they'll be standard, they'll be in similar format. So your turnover, which is, I'm just giving you a very simple example as to what is it that is why these accounting standards are so important. So what happens? the economy of the country itself can be represented by standardizing these accounting policies, because ultimately what we all do, why do you need an accounting standard? One, to standardize the basic transaction entries which are you can only book an expense as an expense. You cannot push it as an income. You cannot do a prior, where do you disclose a prior period expense or a prior period income or something which is deferred? Suppose you have a deferred taxation. How does it get reflected in your account, in your financial statement? What about the disclosures which are happening in the financial statements? All these need to be represented consistently across industries, inter, all of them should represent it in the same manner. And so what happens? Your recognition of financial institutions, your measurement of the transactions, your presentation of the financial statements in a fair manner, and the disclosure, all these become standardized. And so what happens? Why is it that we need? Because we have to say that the reliability of the financial statements is 100%. So what happens? I'm relying on it as a regulator. The banker is relying on it as a financier. The government is relying on it from an economic perspective. So, the decisions which are coming out of the various stakeholders should be the same. So you have to conform to these standards. Then the comparability of the financial statements between industries, within the same industries. All this will help us to know the position of these corporates or these entities in the economy, in the market, and which industry is doing well, which industry is not doing well. All these will again come. So the government in its turn will be able to decide on what is the kind of incentives that are needed. Now you take the MSME sector. MSME sector, all of us are talking about it post-COVID. So how is it going to be handled? So what are I just speak for a few more minutes. What happens is accounting standards ensure that there is uniformity in accounting across all entities, all businesses. So there is a standard treatment in the recording of transactions. And there is a standard format. If you see, you have your Schedule 3 and you have your different reporting formats for different types of entities. So the accounting standards ensure, I'm giving you a very simple one. It ensures that there is a uniformity. Then I spoke already about the reliability which the stakeholders expect. When I, as the government, is looking at a balance sheet, or when I, as a financier or a banker, is going to advance some funds to the corporate, I want to rely on the financial statements which are produced. I need to know that it is a going concern. There is no incipient insolvency within that particular entity. I am not lending funds on a balance sheet which is I would say a shell. So we need to improve the reliability on of the financial statements through uniformity in presenting. If I talk to you in the language of a chartered accountant, I will say that the financial statement has to present a true and fair view of the financials of the company, a true and fair view, for which I would have done some kind of audit processes, which is again based on the auditing standards which are issued by the institute. Then the accounting standard will also ensure that once you follow these principles and methodologies, there is no manipulation in the data. There should be no manipulation. There should not be any fraudulent. Ma'am also spoke about the forensics and fraud. This is an emerging area of practice for chartered accountants and also for people with a financial background. You have to ensure that there is no manipulation within the data. There is no fraudulent or there is no misrepresentation. I told you, as a chartered accountant, I ensure that the financial statement presents a true and fair picture. So there are no frauds and errors within that underlying financial statement. So this standardization helps me also as an auditor to know that these accounting policies which have to be followed have been followed. And so to a certain extent, I can rely on the financial statements and certify that it is giving a true and fair view. I've already spoken to you about the comparability. The other thing which I want to speak to you about is it also helps you to measure the performance of the management of the entity. So, when you are measuring, when I spoke to you about fraud, I spoke to you about presentation of a true and fair view. So what happens, if the management wanted to do an evergreening or present a rosy picture of the financial statement, if they are going to go ahead and follow the accounting standards, then what will happen is they will be brought into accountability. They will be made accountable for whatever it is that is being presented in the financial statement. So having said all this, you will understand that there is a huge responsibility which is fixed on the persons who are preparing the financial statements on the management. It is essentially the management who prepares the financial statement, and it is they who have to follow the accounting standards, and they have to ensure that whatever is the statement which is being prepared for the use of the stakeholders, because it is not only the management who is going to use it, is also the external stakeholders who are going to rely on these financial statements. So they understand that these accounting standards and policies have been followed in preparing these financial statements, and hence, to a large extent, any financial statement will not be 100% error-free or fraud-free. That is also a part of our accounting standards and auditing standards, but to a very, very large extent, they present a true and fair view. So I'm very happy to have, been a part of this program. And I know that all the speakers are, very highly qualified, and they're going to speak today. Dr. Giridharan is going to speak about the cash flow statements, which is going to help any stakeholder to a large extent to assess whether a particular entity based on that financial statement is actually generating cash, or is making a loss, or is making only a book profit. All these things will be clarified to you by Dr. P.T. Giridharan. I want to thank the management for having invited me here today, and also for organizing such thought-provoking upskilling programs, knowledge enhancement, professional development. And I'm very happy that as a partner to this program, ICAI is also a part of this knowledge dissemination. Thank you very much, Prabha ma'am, for inviting me. I'm very happy to have been a part of your program. Thank you.
Thank you, ma'am, for your wonderful presentation. It shows up how you are honest in practicing auditing, and you talked about the financial reliability and true and fair of the companies follow the accountability. If they are very true and honesty, definitely our economy will grow, have a good economic system. And I request our head of the department, Dr. Ragarajagopalan ma'am, to invite the next chief guest.
It's a great pleasure to have amidst us Dr. P.T. Giridharan as a resource person for today's technical session. He is a very special, and it is with great honor and pride we welcome you back to our Department of Corporate Secretaryship and the program on professional development and capability enhancement. It is a nostalgic moment, as Sir is a former faculty of the Department of Corporate Secretaryship, DG Vaishnav College, Dwarkadas Govardhan Das Vaishnav College, from 1982, when the course was first introduced. His yeoman service to the department until 1995 is an integral part of the history of the department. Thereafter, Dr. Giridharan took a giant leap forward in his career in the Institute of Chartered Accountants of India, New Delhi, and went on to lay down his office in 2019 as the additional director. He is an associate member in the Institute of Corporate Secretaries of India and a doctorate in finance from Saurashtra University, Rajkot. His core competencies are in corporate laws, finance, and governance. He has to his credit numerous assignments with the Ministry of Corporate Affairs, Securities and Exchange Board of India, and National Stock Exchange. Dr. P.T. Giridharan is an eminent speaker at technical conferences and has authored several articles in research papers. His deep passion for academics is evident from the fact that he has published 2 books on law for CA students. He has also conducted various training programs, awareness programs, and valuation courses and independent directors programs. So we are happy to have back in our midst. And one more detail about him. Sir, who is a former faculty of our college, is a simple and humble man with high intellectual abilities and resourcefulness. And he proved that an academician can rise to the highest level and professional body. He is renowned for his lectures and presentation on law. He is referred as walking legal encyclopedia at the professional fraternity. So we are happy to have you back in our midst to share your rich knowledge. Thank you.
I request DP sir to give the PPT.
Hi, good afternoon to everybody. Hope I am visible and audible. And I take this opportunity to thank the 2 related parties because I am related to DG Vaishnav College since my career began, and also where I was groomed and developed, that is the Institute of Chartered Accountants of India. So today my transaction with the related parties is a very immense pleasure because I have come to the home turf, and also on the other side I cannot forget the reminiscence and a very lavish experience, exposure and enrichment all the days of my 25 years with the institute. Though I am a company secretary, not a chartered accountant, the ICA gave me a very large platform on various fields, and never a day went out without the program. And perhaps my wish and dream that every day in the night I should sleep well, and because of that enrichment and the capability, it gave me an enhancement and inducement for very good sleep every day. Today also I will enjoy because I am going to lecture for about an hour. I hope by all your wishes I will have a very good sleep, because sound sleep is very important, because dream comes only in sound sleep. So this related party transactions, they have also given me a topic which is a very old one, but still then it has gained a lot of importance nowadays due to the changes and the amendments and what the government is contemplating to bring all by way of legislations. Before I would proceed with the flow on the cash from operations, I would like to extend my humble pranams to the management committee of the Dwarkadas Vaishnava College. And when I heard the prayer song, it took back to 1982, where anywhere and wherever, even on the road, when we hear the prayer song, we used to stand there, even in the bus stand. It brought me the nostalgical reminiscence and the very cherished days that I had in Vaishnava College, which groomed me as an aspirant to go further and further. And I was also very happy to hear the ICA motto song, though it is about 2 years since my retirement. And the song made me feel as if I am still in ICAI. And thanks to both the related parties for giving me an opportunity to speak on a very important topic. What I would like to plan for the next 1 hour is that I will not be just taking a class, because all of you, my colleagues, esteemed college professors, I know the kind of the troubles and the pains that you will be taking in the classes, and managing the 60, 70 odd minds, and also delivering the subject. And nevertheless, the times are very changing. It is not just like in 80s or 90s, where syllabus used to be very fixed one, and the professor did not have to study year and year or day to day. Once he studies for 3 years, till his retirement, the same holds good. But especially after 2010 or maybe very recently, 4 or 5 years back, the change is taking constantly in all the subjects. Perhaps if you take the commerce or the corporate secretaryship, the changes are so frequent. I would say minute by minute, second by second, day by day, the rules are emanating from various quarters, and the professionals cannot withstand in doing their practice without undergoing the grill of knowing the nitty-gritties of the various laws. For a chartered accountant, it is not only one laws or one accounting standards. There are a host of other things. So definitely there is a huge pressure on the professionals. Coming to the college community professors, they do have very lot pressures because they are the deliverable commodities to the student stakeholders. We can't expect every student to be very par excellence. There are some mediocre students, there are certain very dull students, but all said and done, the students will be observing very silently, sitting at the back bench, and you would be the best judge to decide about you whether you know the subject or not. So in such circumstances, it is very, very important for the college of professors, lecturers, professionals, anybody for that matter, including myself, to keep constantly updating our knowledge on various subjects A to Z, then only we'll be able to deliver a very good commodity. Now, coming to the accounting standards, I would like to give a brief backstage profile, because most of you may not be aware how all these games and how they are now in whose custody. Because since I had been a part of the rules making committee of Companies Act with the Ministry of Corporate Affairs, and since 1995, I have been dealing with the legal matters. I had a bit of knowledge where I would like to share with you and tell how the standards have become important. Till 1975, the standards were not at all there at all. So you may imagine how a balance sheet or a profit and loss account can be judged, because at that point of a time it was not even evolved at all. From 75 onwards only, all these started happening at the institute level. So one thing you should understand, in 1975 till 2006, I'm talking about 3 decades, the standards were only a mandatory thing on the auditors. It was not a very mandated on the management, especially on the companies. Having stated that one, it is not that the accounting standards is a bygone affair. The accountant or the auditor of a company, himself a chartered accountant, and he is bound to see that the standards are maintained and followed consistently, even though it may not be mandated by the law. Even the government, all these decades, were not realistic about the importance of accounting standards, though ICA were continuously striving from yesteryear since its formation and even today to share the knowledge with the government and to bring about them what are all the transformational changes that should happen in the accounting standards. So standards by itself is a grammar, like a run and Martin for an English subject. The accounting standards is a grammar for accounting that we have to follow. Initially, for a chartered accountant student, it may not be a difficult one because he reads since he's joining the course. By the way, I want to tell this also because you're all dealing with the students. Never put any pressure on them that the professional courses are very tough, very rigorous, and very, very tough to pass. to my knowledge, the course, the CA course or the CS course or any other course for that matter is easier and the very easiest course. Terms and conditions will apply. Because what you have to do in your deliverables in the classroom lecture is to absorb the hearts and minds of the younger students, because they come with a very blank knowledge on A to Z, and it is you to carry in very simple terms what are all the changes happening here and there, because university curriculum and the professional curriculum have not met together at all. Consummation has not happened at all. That is why we even teach single entry system, which is not there practically in the professional side, because nobody will accept a single entry system. But still, we teach. We have a chapter on single entry systems, leases, hire purchase, depreciation accounting, are all very theoretical. So when you do any accounting, the standards have to be definitely applied. But mere application of AS alone will not suffice at all. As Madam Revati Raghunathan has very vividly put it, still it has got certain limitations. And who will be the party to find out all these things? Stakeholders, some may be quite intelligent and knowledgeable, but it is at the most very difficult to decipher what are all the things that are very hidden in the balance sheet. Because the most important thing of talking all the accounting standards for that matter is transparency and disclosures. Whatever you feel that there is an element of doubt in your doing, you have to disclose that one. How they are going to disclose it, it is a job of an auditor. So one of the best forms of presenting a financial statement, as stated in the last page of the J.J. Irani Committee on Corporate Governance, which I read very number of times, is when you are in doubt, you have to disclose it. It is up to the shareholders or the stakeholders to decide whether they have to buy those shares of the company or be there or amalgamate with any other company. It is their choice. So wisdom lies with the stakeholders, decision lies with them, but those wisdoms and decisions are purely based on your disclosures. And disclosures will come only when there is a transparency of the matter. Earlier, before all these accounting standards came, there was some divergence. Divergence in the sense that due to global competitions, there is another international financial reporting standards. So IFRS following one standards, then global financial reporting standards. Each country had its own standards because of its pattern, climate, the business methodology, and the currency in which they operated, the operational strategies. So if you look at either a German or an American or an Irish, the balance sheet will be very, very different. So if it is different, it is very not practical for us to understand the balance sheet itself. That is why IFRS claim very globally. India, after 1990s, especially when the globalization took place, we were not very near to the IFRS. We were still vacillating and operating only on accounting standards only. Way back 6-7 years back, we thought, the country as a whole thought, that some or other we have to converge with the IFRS. So the convergence took place. Professors may kindly note, we didn't adopt IFRS because adoption means completely adopting. Like a child, you have to adopt it and make to live and grow it. But we didn't do that one. We had to converge with the IFRS. So AS transformed itself and become an Ind AS. That is why we find two kinds of slots for any accounting standards for that matter. For example, today's topic on AS3, which deals with the cash flow statement, the counter, the related transaction or the accounting standards in IFRS is Ind AS 7. So we add the word Indian accounting standards. So to put it very lightly on a very humorous side, whereas AS is the LKG, IFRS can be taken as a UKG. This is not on the lower. The KG is common. The KG on the both sides is very common, and it's only a standard only. AS adopts one thing and Ind AS adopts something. AS is applicable for certain threshold of companies, and Ind AS is applicable for certain companies level. So there might be, to my very little knowledge, there might be only certain carve-out exceptions, which normally we use in the Ind AS. That is, you create some exceptions that this will not be applicable here at all. The examples I will tell you in the course of my lecture. In the last slide, I have presented a format, very simple format. What are the differences between AS3 and AS7? Now, as professors, please do not carry these differences straight away to the platform of the students and tell that there are two things. Definitely, they will not have any interest at all. So you have to always begin from the AS, and then only we have to go to the Ind AS, touch it and then go, because the purpose of all these professional development and enhancement programs is to first enrich ourselves and then enhance the students' level. I'm quite happy that the DG Vaishnav College corporate secretaryship under the leadership of Dr. Prabha and Dr. Prema, and with the knowledge partner SIRC. Perhaps I was in a very jittery mood while I was in the screen, that three ladies were there, whether this program is meant only for Magalir Mattum only. So I had a very sigh of relief only when the mic was given to me. Otherwise, you find that the male dominism in almost all the corporate and any institution is quite changing, and women also are becoming very entrepreneurs, very enterprising. Perhaps may not be at home, but in the office they are quite very valorous, or I would say frontline warriors in achieving things. In fact, we have to praise them for having come forward. As told, there was only one lady chartered accountant, Shiva Bogam, who became a chartered accountant as well as the leader of the SIRC in those early years in 1949 to 52. It is very unbelievable. She left a very deep sigh of impression, and today we find in our course there are a lot of girl students who are not only enrolling, but the most important, they are also passing the examination. That doesn't mean that boys are not smart and very successful or not intelligent. They are also doing their bit of their mind and applications. But what I'm coming to tell is that more and more people are coming to the professions. They are taking a very huge assignments, especially on accounting, auditing, forensic audit. So many fields are there. Now, you have to understand the counterparty of accounting standards. Normally, accounting standards are represented by the letters, capital letter AS. Now, I do, as an accountant, I do certain accounting standards, but who will check on me? Who will come to know that the cash flow statement has been prepared in accordance with AS3 or Ind AS AS7? Now, behind every successful man, there is a woman. Behind every successful balance sheet, there is an accounting and audit man. So what auditors will do is, they will apply SA. That is, first standards are important for an auditor, and then only auditing will come. Whereas when you take the accounting standards, it is AS. Standards comes after the word accounting, but when you take an auditing, it is S first and standards on accounting. Now, for every accounting standards, there is a relevant part, equivalent part of auditing, because you have to check how far you have complied with the accounting standards. So the relevant part for AS3 is SA 300, which is outside the scope and domain of today's knowledge. But as professors, you have to learn that both accounting and auditing standards today have been legalized. It has come in the Act itself. So there is no carve out exceptions for anybody except for certain things only. Government expects every corporate entity to prepare the financial statements in accordance with accounting and auditing standards. They are just like two sides of a coin. I would not tell that this is head or that is tail, or we can very tell when accounting is the head, the auditing is not only the tail but also the trail. So they will leave their impressions how far the accounting standards have been followed with, whether it has been complied or not. Or at best humor, they are just like couples. Who is beautiful? I leave to the choice to you, because small is always beautiful and big is always very bountiful. So the template is while there is a statutory auditors for a company, there is accountants within the company itself. So a company follows all the related accounting standards, including the internal audit and present to the auditors. That is why in earlier years, you might have studied in our olden days of commerce in Lewis Cotton Mills, auditor is an watchdog. But that is 1867 case law. Today, the government and every stakeholder expects the auditor to also be a barking dogs. I'm not adding any demeaning to them. The expectations on the auditors have increased. So they have to bark, which means they have to whistle blow that where is the limitations, what has been suppressed, what has been surmised, they have to do it. The story doesn't here. Not only the auditor has to be bark, but he also has to bite. Whether it is a Cadbury bite or a real bite bringing out the blood, it depends upon the tenacity and veracity of the auditors. So the expectations of the auditors have become so enlarged and so very diversified. It is very difficult and very onerous job on the part of auditors to see that the compliance of the laws, rules and regulations, not only with regard to accounting and auditing standards, but related to other laws. Remember, accounting standards does not deal only with the accounting. There is an accounting standards on compliance of laws, various rules and regulations. Those laws and regulations may run up to even 70 or 80. For example, if you take a pollution control, the list is very large. So the expectations have made everybody to see that the financial statements are presented, depicted a true and fair. But the problem is that all are not true and fair. It should be very fair and lovely. Then only it would make me interest to invest in the shares, because basically why we are seeing all these financial statements, because we want to invest in that particular company. I may be interested in one segment and you may be interested in different segment. Stock market may be reacting altogether a different segment. So all this process underwent a very major change in 2013 when the Companies Act 2013 get started. 2014 it came into practice. So the first thing before we begin the cash flow statement, why we are reading and understanding and knowing the cash flow statement, because all of you, including myself, we were thinking that cash flow statement is a part of the management accounting. We had a financial accounting, we had a management accounting, and we had cost accounting. For the time being, I will not touch upon the cost accounting. We will see only the difference between financial and management. Now there is a convergence. This cash flow statement, which we were working out problems on the board, cash at the beginning and the cash at the end, and adding and minusing and arriving at it, was a part of the management activity. But today it is not like that one. It has come within the fold of the financial accounts, within the fold of the accounting standard AS3. The reason behind that is the definition of a financial statement has been changed. Earlier, it was only two parts, the profit and loss account and the balance sheet. Today, it encompasses two more parts. One is the cash flow statement, and fourth one is statement on changes in the equity. To me, as a very, very normal student learner, even today, apart from the balance sheet and the profit and loss account, the two most important thing I would look upon is only the cash flow statement and statement of changes in the equity. We had a dream called fly-by-night operators. Those nights are gone. Today, there are fly-by-day operators. In the day itself, they fly with the money. When you talk about the money, it is actually the cash flow. We are not talking about the movement of the cash flows. Esteemed college professors, there is a difference between flow and the movement. This, perhaps to me, is also one of the limitations of these cash flow statement. For example, to be very practical, when I discuss with the students, I would always love to touch their hearts rather than expounding my knowledge on them, because my knowledge may be quite shallow, inferior or superior, but there are very kindergarten students. To touch them, take for example a teller in a banker. He will be left in the morning when he opens the chest with 1 lakh, and in the evening when he closes the teller counter, he might be end up with 50 lakhs or something else. How this 1 lakh had become 50 lakhs, he will come to know when he prepares the cash flow statement. But during the meantime, between 10 o'clock and 2 o'clock, how the movement of cash flows happens, nobody knows it at all. I can even give you certain 2 lakhs, you take away and come back before I close the counter, you will definitely come back. This will not be a part of the system at all. So basically, cash flow statement is very historical in perspective only. You can't expect the movement in the cash at all. It's very difficult to find out the movement, just like a truck movement or a transportation of goods, we can't find out in the cash flow statement at all. So the cash flow statement, the government has made one of the subpart in the financial definition of financial statement. Now, it is a statement. That is why it is very critical, very crucial, and also very, very dangerously important, because you are giving one statement. I can give one report, I can give one medical report, whatever may be. But when I tell a statement, it is a statement of facts with figures. So, enormous amount of application of mind, not only the mind, but application of AS3 has to be incorporated in preparing the cash flow statement. The treatment that you are doing under the management accounting, under AS3 is going to be the same. If I work out on any methods, whether it is a direct method or the indirect method, the answer is going to be the same. There is no materially any differences that you are going to do on the blackboard. It is going to be the same only. But you may very well ask me, then why, sir, why these standards? That is where the accounting standards play a very, very important. Let me give you one very, very dashing and a very thrashing experience of cash flow statement. Suppose, for example, take for example Chennai or any other metro. The metro rail is acquiring the property anywhere it likes, and it all comes under the national acquisition of lands and undertakings under some special act of parliament. And you can't go to the court of law at all. You can only ask for the compensation, and if you do not want to get the money, you will be given some free land elsewhere or anywhere. But if you accept the money, so what happens? It becomes a cash flow to you. Now the problem is that how the enterprise will treat that flow into the business. It's after all a cash flow, maybe 1 crore, 10 crores or whatever may be the thing. Now I would not treat this compensation received from the government department for acquisition of my land as an ordinary item. I would treat only as an extraordinary items. So extraordinary items will not form part of the cash flow statement at all. But for a student to know, For him, everything is a cash. Whatever he feels like that, it will be. For example, a factory has gone on fire. You receive a fire insurance claim. I can't treat it as a cash flow statement because it's a very extraordinary item. So it has to be disclosed elsewhere and separately in the balance sheet, but not forming part of the cash flow statement. Like this, when you are beginning a topic on cash flow statement, rather than attempting to solve the problem, because students' mind is only to solve the problem. Cash at the beginning, cash at the end, tally share when you are going outside. This is all they expect. But if you take a little bit of time, just 5 minutes of a time, because every by crook or hook, you are going to arrive at the cash at the end. But how the flow from the operation has come, that is very, very an important segment. That is why the cash flow statement has become a very integral part of the definition of the financial statement. The fourth component of the financial statement is nothing but statement of changes in the equity capital. Now today you find even the capital is being drifted away. If you look at all the SEBI listing rules and regulations, whenever they come with IPO, today we find Zomatos are coming with IPO offer, and so many tomatoes are subscribing to the Zomato offer. But somebody should watch at the end that how this subscription money is being utilized for the purpose of the business. Zomatos are only the delivery partners. They can't just take away the money and put that I will grow tomatoes in some Zambia or America and grow. It is called diversification and misapplication of funds. So in the SEBI listing rules and regulations, they give a similar pattern of cash flow statement that merchant bankers have to give a statement that money that has come by way of subscription has been properly utilized. It is maybe a fund because the difference between a fund and cash flow has now been very marginalized and taken over by the cash, because fund is always referred to as the working capital. How much you need for your normal day-to-day operations like external commercial borrowings, loans, overdraft, credit, short-term loans and borrowings. All this is a part of the working capital management. But among the segment itself is the cash. Now, the next part, the delivered part that you have to take to the students is why I'm taking much of a hard time before I go to my PPTs, that one. The students' mind will think, sir, profit of the company is very good, but there is no cash. So what do you say, whether profit is important or cash flow is important? The question itself is very difficult to answer, because even the profit, we are taking into account, because without a profit, there cannot be any cash flow in the operations. But how do you judge whether the profit will be better or the cash flows operations will be better? There is no direct answer. Many people have given a different type of answer. But having stated that one, literally we have to conclude that if you have good profit but no cash flows, still you are a bad company. You have a large cash flows but little amount of profit, it's the same way, still you are a bad only. But the critical point is that you have too much of cash, resources, reserves. Does it have a feel-good factor? In my opinion, it is not. That means you are not utilizing the cash to the fullest extent possible, because there only the investing and the financing activities take place. Operation is on one side, and the profit derived from all these operations, the company, normally almost all the companies, including MNCs, big corporate houses, will try to see that either it is invested or financing for other activities only. But when they are putting into use all these things, we have to remember whether it is for the purposes for which the funds have been sought. We cannot go outside the memorandum or the articles to see that we have got excess cash flow and we will give. Because the tendency of the corporate might not be a bad or in a very bad taste. His thing is that why not we invest and grow in some other companies? So today they have found a loop way. You form subsidiary companies, transfer the money or the cash resources from the holding to the associate or subsidiary companies and see that the cash goes somewhere. So what happens is this main company is left with very meager cash, and subsidiary companies are stuffed and slushed with funds, and tomorrow the liability between this holding company and the subsidiary or associate companies get lost. That is why the government brought one more regulation that, especially in the case of an investment companies, you cannot have more than two layers of businesses, two layers of subsidiaries only. That is why today we are having a problem of all these shell companies. So cash on the one side is most dangerous. On the other side, it is very, very essential. Hence, the application of AS3 brings into importance that how you have to present your cash flow statement becomes very integral. And also coming to the banks also, today we find even our fixed deposits sometimes remains deposit in fixed. We do not know how far our deposits are safe. Why? It is not that the banks doesn't have cash. Their capital gets reduced. That is why for banks, the capital adequacy norms is most important. Somebody has to pump in liquidity into the banks. So they also have to prepare a cash flow statement. Every component of any business enterprise, they cannot get away from the cash flow statement, and the cash flow statement have to be prepared. It becomes more and more important, especially for the banking companies, when all the lendings and borrowings and advances goes in the form of an NPA. Now let me go to my PowerPoint presentations. Then you will understand that what exactly I have proposed to give in that one. Now, what is this CFS? CFS, I very purposely put out the CFS because, on the other hand, for an accountant, it's easy to consolidate the financial statement even there. But for our purposes, it is a cash flow statement. And what I have mentioned, though I will not read into that one, I'll just only tell you for the purpose of expansion knowledge, it deals only with the flow. That's all. It does not deal with the movement among the cash and the bank balances. For example, you withdraw from the current account and deposit in bank for 60 days. It will not get reflected in your cash flow statement. So the flow is very, very important. Now, when I want to mention about this flow, you have to tell to the students, because they are all studying management accounting and other related subjects. The cash flow is very, very important for the purpose of various other purposes. And today, these cash flows forms a separate form of a practice. Let me tell you why this flow is very, very important. And if it is not for the purpose of cash flow statement, definitely for other purposes, cash flow computation is very, very important. Now, when we are doing the capital budgeting, either you want to do the net present value or you want to do the internal rate of return, the cash flows are very, very important. When you say cash flows, it represents two parts. One is the inflow and the outflow. Now, when you are doing the present value of a cash flows, we are finding out the difference, what has come in and what has gone out. If it's a plus factor, the present value of that entity will be very good. Then you will go in for absorbing, amalgamation, purchase of that company. So, when from the management accounting perspective, this cash flow computation is very, very important. In financial accounting, what we do, whenever any chairman of any big companies, they will be always harping upon the term called EBITDA, earnings before interest and tax and deductions only. This is one form of the flow. Now, this flow has to be very correctly calculated, because the basic support, it comes only from the cash flow, because we are going to discount this cash flow for the future years, say down the line, 5 years, 7 years, 8 years, 10 years, we are going to discount this cash flow. Now, if this arithmetic is not correct, the purchase and sale of business itself would land up in certain problems. Similarly, in any valuation of financial statements, suppose you want to buy the shares or value the securities, debt instruments, so many things else, cash flow is very, very important. While normally, theoretically, all the books which say, sir, it is very, very important for liquidity, solvency, stakeholder, these are very, very basic knowledge which has gone actually. It is bygotten and forgotten. Today, we have to see, relate this flow of cash to what purposes. Simply, it is not AS3 or Ind AS7. We are going to take these facts and figures for various valuation purposes, amalgamation purposes, absorption for raising project syndicate loan, collateral funding. Every banker will say, what is your cash flows? How we have arrived at it? So you have to present that this has been presented either as per AS3 or by Ind AS3. So consolidated, cash flow statement deals only with the flow, but does not deal with the movement. This is my first slide. Then the scope. So, because the accounting standards, though I don't have a time to prepare, if you just type AS3 in Google 3, and if you get your first slot as MCA, then you will find the document on various accounting standards in the website of the MCA. Earlier, the ICA used to do the groundwork, prepare, establish the standards, but the pronouncement and announcement part of it is now gone to the government, that is the Ministry of Corporate Affairs. So the intellectual groundwork is done by the ICAI and the announcement part is done by the MCA. So there's no difference except for is, if you want to know what is the current status of AS, you have to go to the MCA website, type AS3 or AS7, whatever you want to like that one, and then you will get the document. It contains about 48 pages. Maximum, to my knowledge, it will just take about an hour, and it will be the same that you read it in the various university textbooks. There is no difference. Only thing is, they may not have mentioned what is AS3, but when you go through these AS, you'll find out how we have to progress one by one. The format is the same. That is why always, whenever we come to accounting standards, there are two clashes. One is the format and another is the substance. Always, there will be a conflict of opinion between a format and a substance. Let me go further, and very, very important, because I am talking about the scope. Now, today, we are finding out the financial statement only in Schedule 3. Schedule 3. Now, why I am mentioning all these things, Schedule 3? Because this student, be a BCom or a BCom corporate secretary, is going to be elevated. Tomorrow, after finishing the 3 years or at the beginning of third year, you would like to definitely join any of the professional courses. So he will transit from a bookish knowledge to very practical knowledge. Nobody understands the subject unless until the flow is with regard to the figures. If you say AS3, he will understand. He will not ask you much more than, because both the minds will agree that he is talking on an accounting standards. AS3, which deals with the cash flow statement. So sometimes the format is important, sometimes substance is also very, very important. Sometimes troubles will come within the format and the substance. Let me elaborate a little bit further, because every day when I read something, it should bring an introspection to mind so that my knowledge becomes very clear. All of you know that the capital consists of only two kinds. One is the equity capital and another is the preference share capital. In India, we are following the Indian accounting standards only. We are not adopting the IFRS fully. But in all the other countries, Western, Eastern or South Asian, the preference share capital is described as a liability. But in our format, there are only two parts, that is the capital and the liabilities. Even those capital liabilities have been divided as current liabilities and non-current liabilities. On the asset side, as current assets and non-current assets only. And what they have done is that one, which many of it may not understood, is we are having only a vertical form of balance sheet only. There's no horizontal. Now, you may very well ask me, what's the difference between horizontal and vertical? There's no difference at all. Only thing is, side by side, if you give a statement, it is horizontal. If you give in the form of top to bottom, it is a vertical form of balance sheet. So, Schedule 3 has followed a vertical form of, even a cash flow statement will come in the form of a vertical side only. This does not bring any great amount of deal and enhancement, but your knowledge get enriched. Why they have dropped in the horizontal cash flow statement? Coming to the point that in our Indian legal system, a capital cannot become a liability. When capital will become a liability, when your company become insolvent, you are not able to pay anything at all, then you are only liable to the creditors, but not to the contributors. But in the Western side, in the IFRS 1, the preference capital and its coupons are treated as a liability for that matter. That is why I told you we are unable to follow IFRS very fully and consciously, but very concisely, and taking the Indian standards together, we have called it as an Ind AS. Wherever necessary, we have given a carve-out exceptions. So when you read a cash flow statement, you will have an AS3 on one side and Ind AS7 on the other side. Now, the scope is to present for each period. Now, the every word is very, very important in the accounting standard. What each period? For example, as per SEBI listing guidelines, you have to prepare quarterly statements, Q1, Q2, Q3, and Q4. So, question arise, yes, whether we have to prepare for all the 4 quarters. Invariably, you have to prepare the cash flow statement, because not only profit and loss account and the balance sheet is prepared on a half-yearly basis. If it is a very listed company and if you are following Ind AS, then it is mandatory that for each period, whenever you are preparing the profit and loss account and the balance sheet, cash flow will also form part of your statement. Now, it is a cash flow statement. Now, what they have done is that even a profit and loss account is being nomenclatured as statement on profit and loss. So, when you make a statement, your net profit should be arrived very exactly and very correctly as per the accounting standards. There cannot be any dodging or a misnomer in arriving at that the net profit has been arrived subject to certain errors and exceptions. If you say errors and exceptions, you will be exempted from operating the enterprises itself. That is why they have brought in the word statement, even in the profit and loss code. Balance sheet, okay, it's just a piece of a sheet only. But in case of a statement on profit and loss and cash flow, they have used the word very statement. So that means AS3 is very compulsory. Now, applicability of AS3, that is the cash flow statements. Now they have brought in this cash flow statement for 2000 under the 2013. Now what they say is that it includes the balance sheet, profit and loss account, income and expenditure account, cash flow statement, statement of changes in equity. All this you have to give, because what happens, sometimes capital, all of you, my esteemed professors know, capital at any time cannot get reduced at all. If it gets reduced, which means that capital is not represented by the available assets. Today, very precarious situation we are seeing in the bank balance sheet is because assets have become non-performing. So when assets become non-performing, what happens? You don't have a capital at all. So who will bring this capital? Because it's almost most of the public sector enterprises, 29 and 24, today have been consolidated into eight banks, 3:1. The reason is the government, which is having a 100% stake in the capital, is not able to infuse capital adequacy, because that is following a Basel III norms. So how will they bring the capital? By infusing the cash flow only. But government is having a problem of cash. It's having a huge deficit budget. So what now they are doing is they are throwing all these banks as an IPO. Once you put all these banks in an IPO, the public will subscribe, cash will come in, and definitely asset will be represented by the equal amount of capital. Today it's very precarious in most of the banks which is running to scam or not able to perform very good. The reason is capital is not there. So fixed deposit holders in most of the cooperative companies, especially in Maharashtra, faced with a very piquant situation that the deposits are not repayable at all. Government has to intervene and say that they have to pacify them. Yes, we will pay after some amount of time. That is why you find the bill is going to be laid out in the parliament in the next week, that the guarantee for the fixed deposits have been enhanced from 1 lakh to 5 lakhs. This you have to explain to the students that how cash flow is very, very important, whether it is with you, whether it is within your pocket or outside your pocket. Cash flow is very, very important, because in this pandemic situation, the last 1.5 years, many MSMEs or even the large enterprises become very defund. I mean, they were not functioning at all. The problem is not due to pandemic. There are no operations. Operations due to lack of availability of the working capital, which includes cash also. They were not able to sell. Products were lying in the godown. They were not able to pay the salaries. So what happened? Ultimately, they have to depend upon the packages from the government only. But still, the situation has not come out in spite of the packages given by the government. That is why the statement of changes in the equity is very, very important. Apart from it, they have given one explanatory notes that this has to be prepared by all the companies. They have not given exception to anybody at all. But the Act also specifies certain categories of company which are exempted. They are normally one-person company, small company, dormant company, means which is not working, which is not functioning for the last 2 years or not submitting its financial statement, plus startup companies, provided they are private company. These companies alone are exempted in preparing the cash flow statement. Otherwise, the Nidhi companies, chit fund companies, NBFCs, they are all not preparing on the balance sheet. They are operating only through cash flow only. And they give only the balance sheet. Now they are left with no other opportunity except to prepare the cash flow statement in accordance with AS3. Okay. Now, what does AS3 deals with? I'm not going to work out any problem or work out in the board to arrive like a student, sir, beginning, closing, my cash flow statement is tallied, sir, please give me marks, and when you are going, I'm not doing that exercise. I'm only giving a knowledge information that what does AS3 deals with it. What they are doing in the class is also one and the same, except AS3 will be always pronounced at every point of the time. Now, it deals with the historical changes. Again, that's a problem of the any accounting standards or financial statement. It's only a post-mortem affair. You can't pre-blow what are all the changes that could have been happened. It's not possible at all, because it does not deal with the movement, but deals only with the historical changes only. Through which it classifies 3 factors. This is where our story, real story on starts. Even though I got a couple of 20 minutes, I would like to finish because I have prepared only 15 slides. The one is the operating, financing and investment activities. Once this slide is explained very clearly and simply to the students, I have no doubt in mind AS3 will has gone into their heads. Now, one is the operating activities, the middle one is the investing activities, and the third one is the financing activities. The second part and the third part, we know about it, what is investing and what is financing, but we do not know what is operating. How they are operating, it depends upon the generic nature of the business. For example, if it is a chit fund or a Nidhi or NBFC company, the operating activities are nothing but investing and financing only. It changes its factor. But for all other companies, this investing and financing will not be an operating activity at all. For example, if you take an IT company, they are operating only into consultancy, development and supply of the software. That is not investing and financing activities. But if they get much of the surpluses from their operations and start investing or financing other people, then you have to distinguish between what is investing and what is financing. Because sometimes the statement of cash flows has to be segregated in a proper way according to the nature and the gene of the business only. If it is a company which is dealing with the food, then production of food items only is operating activities. Now, what mostly people does every time is that they got enough cash flows, and enough cash flows are invested or financed somewhere. And enough of investing and finance activities may not give that return over a period of time. So what happens? Whatever they have operated, whatever they have invested and financed has not come back to the company at all. So it becomes a Diwali company. For example, as I told you, we are dealing with the standards, and there is no particular standard definition for the standards. It all goes by the number only. For example, if I want to talk about a certain dal or parpu, I will say, give me Udayam brand. If I want oil, give me Idayam. They are very close to the heart. So that is a standard. Idayam means that is a standard. Udayam means that is a standard for the dog. Similar factor for that matter, that AS3 is dealing only with the cash. When I say cash, I will talk about all about AS3 and nothing short of cash only. So you have to tell to them that flows have to be divided properly into 3 activities, and accordingly your statement will also begin from the operating activities, investing and the finance activities. You can follow any method for that matter, whether you can follow the direct or indirect method, which I'm coming to the next slide. Now, question is, what is the element of cash? The standard says cash includes cash on hand and demand deposits with bank. Now, why this demand deposits with bank has come as cash? Because in the even in the balance sheet, we show cash on hand and balance sheet bank very separately. We do not club together at all. But how demand deposits with the banks will become cash? Because at any time you can break the deposits with the banks. And what happens? You get a cash on realization in T+1 or T+2. That is why cash includes cash on hand and demand deposits to bank. The third one is very different with the AS3 as utilized is cash equivalent, which includes short-term, very highly liquid investments. That means highly liquid means we can be converted into cash at any amount of point of time, say 30 days, 60 days, and securities with a short maturity period. For example, 3 months, government security bonds. And there are so many securities in the market which can be realized within 1 month or 2 months and 3 months, but not more than that. Otherwise, it will not become a short term, it will become a long term. But again, there is a discussion. What is a short term and a long term? It's a matter of a discussion. But coming to the cash, only short period will be taken as a cash equivalent. Rest of them, you will treat it as a cash only. So this you have to explain to the. Then I told you that the elements of 3 activities. Here only the real importance of the standards plays. The first is the operating activity, means the principal revenue producing activities of the enterprise and other activities which are not investing or financing. Practically, on the field, it does it opposite side only. Though they are very principally revenue producing activities, most of the enterprises does investing and finance activities. So what happens that the investment and financing are not a part or only a sub part of the main activity, but during the operations of the enterprises, they take investment and finance as the main activity, which is actually wrong actually. So operating activity means if your electricity companies, your principal revenue is from the generation and production of electricity only. Now suppose you got an enterprise, for example, electricity finance company, it may be a sub-part of your enterprise that does not produce any electricity at all, that deals only with the investing or financing. Now you may very well ask, or students very well ask, sir, what is going to matter when I prepare a cash flow statement if I put operating on finance or finance as operating or otherwise? My statement is going to become very perfect. Yes, the thinking by the student is very correct, but not relevant as per the accounting standards. In accounting standards, the problem is that one, whatever the grammar that they have enshrined in the document have to be followed not only in letter but by spirit. Both is very, very important. That is why the cash flow statement, standards on statement tells one by thing what are all the things that you have to observe while preparing the statement. Then financing activities result in changes in size and composition of the owner's capital, including preference share capital and borrowings of the enterprises. So out of the cash flow, you want to finance somebody else. You want to finance, you want to go intercorporate loans and investments. So then it will become a very finance activities. Now you do not want to finance, you enter straight away into the market, share market. Most of the big enterprises have got a stake. For example, you may very well recall, though it may not be out of context, very rarely, big enterprises like Reliance and Adani, apart from their operating activities, they become the principal revenue generator in the stock market only. It is not due to the main activity. They have invested their stake in various other companies. So you find that that particular company, maybe X or Y, which has invested in other company, that particular company share is rising very well in the market compared to the investing companies. So problem will happen for the shareholders of the stake enterprises. Why company X, which has invested lot of its resources, including in cash in other company, where that scripts are growing, but the parent companies are growing. So there is a perplex, there is a paradigm. Having lot of cash is also a problem. Having no cash is also a problem. Having a middle level cash is also a problem. Hence, the importance of the cash flow statement cannot be undermined, even though it doesn't present anything very significant that what great changes have been brought by AS3. And how you report, how to report. Now, what these standards are always telling is that one, you can follow the direct method or the indirect method. Here I want to tell, because of very limited time, I want to interact with you. Indirect method has been pronounced by Ind AS 7, whereas in the AS3, you can follow either the direct method or the indirect method. The result is going to be the same, but the Ind AS carves out some exceptions. So you go by the indirect method, where the net profit and loss is adjusted. That is what we are doing in the blackboard. You take the adjusted net profit or loss, add all the sources, less the applications, and then at the end you get the cash at the end only. So Ind AS says you follow the indirect method. AS3 talks about the direct as well as the indirect method. This I have already told you, but specifically I have given certain paragraph which I have taken from accounting standards. I am not able to put the entire paragraph here. 22 and 24 have to be reported. All these cash flows cannot be on gross basis. You have to net it. That's an exact one. What people will do is that I have received one cash, but whether it is after TDS or not TDS, nobody knows it at all. But as per the accounting standards 3, every cash flow statement has to be reported only on a net. When you say net, it is after depreciation or after interest or after dividends or after taxation only. You have to do it on a net basis only. Okay. This may not be, again, maybe a quite a repetitive item. They are talked about cash and receipt payment because of the customers, and again on the turnover, good, again on the net basis only. If it is not only from other activities, if you are even receiving from a client or a customer, the cash flow have to be reported only on a net basis, which means that in this case, AS5 and AS11 will come into factor. I'm not going into AS5 or AS11 for the time being, but AS3 talks about the other related accounting standards, that is AS5 and AS11, which I'll come to you after this one. Net basis. And these are all some of the items which the accounting standards have given very elaborately. This is what the main crux of a professional as compared to a theoretical knowledge. For example, foreign currency cash flows. You may get a dollar inflow if you are trading on a crude, or for example, Reliance company, if they are dealing on a crude, it is a large amount of currency will come. Now, how we have to report this foreign currency? They say apply AS11, which is on the actual rate. Now, suppose you are not applying the actual rate. What they tell is that receipt will be at one point of time and accounting will be at a different point of time. There will be a difference, especially in foreign currency. So they say use the weighted average method in reporting of the foreign currency cash flows. So in cash flow statement, foreign currency have to be reported either on actual rate or receipt basis or on the weighted average method. Extraordinary items I've already told you, which are not part of the generic usual activities, have to be disclosed separately and don't put it in the cash flow item. Insurance claim, extraordinary loss, for example, pandemic loss, something you don't disclose it in the cash flow statement. Interest and dividends should be treated either as operating or investing. But if you are paying dividends, then you have to treat it as a financing activity only. Because what goes in, what goes out and comes in may change the very character of financing or investment, which I already told you otherwise. Then taxes on income, you treat it as operating unless it is otherwise. So any income which are getting out of taxes, you treat as operating expenses. Then investment in subsidiaries, associate and joint ventures, including acquisition and disposal of subsidiary business, should be treated as only investing activity only. Then non-cash transactions should be excluded from the financial statement. Don't put it on the cash flow statement at all. And if you are giving a component of cash and a cash equivalent, what AS3 is telling, you have to show a reconciliation with a summary that how you have reconciled between a cash. I already told you what is a cash on hand and demand deposits. Cash equivalent also I have told you. Now you have to give a commentary how you have arrived at the reconciliations and other disclosures with a commentary. These are all some of the items that the AS3 has included because of its practicality from a purely business point of view. From a student's point of view, at a college level, they will come as a very ordinary item only. Nobody will give an item in the book called, sir, during the pandemic period, some fire has broken. Insurance company has given a claim of rupees 10 lakhs. So immediately what we will do, we will take it as an item and put it either in the operating or investing or finance activity. It doesn't going to make a difference as far as the result is concerned, but classification will be a wrong thing. This is one item. And to end with that one, what's the difference between AS3 and AS7? Now, bank borrowings are generally considered as a part of the financing activities. I've already told you in the very beginning. But what Ind AS requires is that bank overdraft, which are repayable on demand, to be formed as a part of a cash and cash equivalent instead of classifying it as a financing activity. Now, AS3 is very silent on the matter. It doesn't talk about anything at all. But Ind AS requires to treat it as a part of the financing activity. Now, Ind AS requires more disclosure. The more amount of disclosures, for the want of time, I'm not touching Ind AS. Then other differences is AS3 uses the term reporting currency, but here we always talk about the functional currency only. Then some entities purchase assets and then give such assets on rent and lease basis. What Ind AS says is such a classification from activity, example, payments should be shown as operating activities only. And AS3 does not talk about anything at all. So generally, though we can see on the screen, it will be just reading out of the table, and I hope all are not blind except for the font size. Ind AS, as I already told you, carve out certain exceptions only. That's all. It doesn't, and it is applicable only for a certain threshold companies only. AS3 is mandatory on all types of companies. Wherever they are using an Ind AS7, it not necessary that you prepare even under AS3, because Ind AS7 incorporates the principal components of AS3 also. So otherwise, no, the end result is going to be the same, whether it is cash flow from operation as per AS3 or Ind AS7. It's going to be the same only. Wherever the companies are required to follow Ind AS3, then you have to follow the Indian Accounting Standard 7, which is also under the website of the company itself. So these are all the some of the small things in the Ind AS7, and if you got time, we can discuss about it, and I will stop the screen and come to face you very personally. In fact, I wanted to be very humorous from the very beginning to the end, but I will not leave with my humor, which is my vivid presentation of my any lecture. All these people who are attending this enhancement program, you're all blessed. In our days, getting an enrollment in FDP is just like a blockbuster cinema. If you get a seat in FDP, you are like Annate. That means you will get your increment, you will be promoted as lecturer to associate professor, whatever may be, and you have to go out of the town for 21 days. So no principal, no secretary, no HOD, nothing else. But today, with the pandemic situations, and anybody at any point of a time, you can come to the online. You do not have to go out of station and face the virus. No virus if it is in online transactions. So it has gone a very tremendous change when I see all these programs are being conducted in the online only. Now, whatever I have done in the short, limited period of time is only the exposition of my intricate knowledge while I'm dealing with the regulator. There are still many other I have to tell, but I'll be deviating from the topic it is given. However, to end, I would like to quote a Tamil couplet from Swami Vivekananda. Sigapu Manidanuடைய நிழல் கருப்பு தான், கருப்பு மனிதனுடைய ரத்தம் சிகப்பு தான், மனிதனுடைய வாழ்க்கை வண்ணங்களில் அல்ல எண்ணங்களில் தான் உண்டு, எண்ணங்கள் எப்பொழுது வரும் when you have a நம்பிக்கை and தும்பிக்கை. What is most important is the self-confidence in yourself. Do not think that you are in college. I walked from college to ICA. I'm a nomadic animal at any point of a time, even now also. So thing is, I would like to explore wherever the greener opportunity lies. But having stated that one, all my fertile knowledge is all because of the college in which I was grilled. Those days were very, very terrific. There used to be watchers and followers, that how they are performing in the classes. So that's how all this confidence gave me to lecture about one. With this, I thank Dr. Prabha and Secretary and the SIRC for giving an opportunity to present within a very short period of time on the cash flow statement. I hope you enjoyed my flow. perhaps you'd be missing my jokes. Many things. I became very serious when I came on the accounting standard because it's a very serious subject. With this, I thank every one of you. Very good luck and my best wishes. Thank you.
Thank you, sir. It was mind-blowing about your presentation. It was really informative. We got good examples from you, which understood the accounting standards and the importance of cash flow. This is what new thing we expected. Never heard about this explanation about the cash flow management, about the cash flow and as well as the cash movement and the profit and the investing activities. Thank you. It was really superb, sir. Now I request our head of the department, now, and VP sir, to post the any request or questions in the chat box.
There's a famous saying, surround yourself with experts. We also heard from the expert. It's really a very good chance for all the learners, experts, to learn about this accounting standard. Okay, on behalf of Dwarakdas Govindas Vaishnav College and Department of Corporate Secretary, both Shift 1 and Shift 2, I thank Dr. T.S. Prema, the coordinator of IQAC and convener of SNAC, for giving a wonderful introduction about the topic and as well as the keynote speaker. Followed by him, I also thank CA Revati Ranganathan, the treasurer of SIRC of ICI. She also given a very given a speech about the importance of accounting standards. Followed by the Dr. P.T. Giridharan sir has given a very wonderful speech and grateful to the students for giving a great speech on AS3, explaining the clarity on income from financing activities, operating activities, and investing activities. Also clarified about the Ind AS. We are so proud to see our faculty has reached the biggest height in his career towards providing us national contribution. I also thank our department head, Dr. Prabha Rajagopalan, who is instrumental in preparing the theme of capability of enhancement program for the faculties, research scholars, etc. I also thank the faculty members who are really enjoyed the session and the research scholars who also got very good knowledge on these things and the professionals, viewers, the students, etc. Thank you one and all.
So waiting for the questions. You have to post the question or you can give the link. Getting the link for feedback. The feedback can is in the chat box. You can kindly fill it.